Hey everybody, and welcome to the YouTube channel. So today we're going to be looking at the notes to the financial statements, specifically the one that you all struggle with, Note 3, tangible assets. Okay, so I'm going to try and simplify this and make it as easy as possible for you guys to remember, because it is really not that hard. Right. So before we move on, let's just take a look at some notes I've made. Okay, so this is the format of the tangible assets. Okay, just so that you can see every asset has a carrying value at the beginning of the year. It has some movements where we either purchased, sold, or depreciation took place, and then carrying value on the last day. Every asset has to have that. The only one that doesn't have depreciation, some form of depreciation, is land and buildings, because land and buildings doesn't depreciate, it appreciates. Right. Just some key points to remember before we look at an example. To get your carrying value at the beginning of the year, you need to say your cost minus your accumulated depreciation. So this is your depreciation that you start off with in the financial year. So it's the previous year's accumulated. Okay. Right. To get movements, it is additions at cost minus disposal at carrying value. So the sale of assets minus depreciation. So this is for the current year. Or alternatively, you can even use the carrying value on the last day of the year, or carrying value at the end of the year minus your carrying value at the beginning of the year to get your movements. All right. Then to get your carrying value at the end of the year, you could say carrying value at the beginning of the year plus movements, or cost minus accumulated depreciation. So this is calculated, accumulated depreciation at the end of the year is calculated by taking accumulated depreciation at the beginning of the year and adding the depreciation for the current years, and that is under movements. All right. Depreciation at cost. Some of you get confused between depreciation at cost and depreciation with carrying value. Alright, so let's just talk about it. So we will always depreciate the asset or assets at its cost price. So this is the price that we purchased it at, okay? No matter how many years we've had it for, we will always calculate depreciation using the price that we bought this asset for. Alright? Depreciation with a carrying value, okay? This is the one that most of you get confused with. You're not sure how to calculate it, okay? So we will always depreciate the assets at its carrying value in the books of the business, okay? So just an example for you to see, okay? So the carrying value on the 28th of February 2020, so our financial year ran from the 1st of March 2019 to the 28th of Feb 2020, okay? So the carrying value for equipment is 42,000, okay? The business has a depreciation policy for equipment, and it depreciates at 20% on carrying value. So for the financial year, we say depreciation equals to 42,000 times the 20%, all right, times 12 over 12 or 1, you can put it in there. Alright, and you will get a depreciation of 8,400. So this amount will be added to accumulated depreciation at the end of the year. Okay, why I say 12 over 12 is because sometimes we can buy an asset and only have it for 6 months. Alright, so we don't depreciate that asset by the full 12 months, but only by the 6 months we had it for. Alright. But remember, when we do that with depreciation, we have to calculate depreciation on the old and then depreciation on the new. But I'm not going to get into too much detail about that, because we will do it when we do asset disposal. Right. Now, I want you to just have a look here. If we had to calculate the new carrying value on this what equipment that we depreciated, now the new carrying value would now be the 42,000 minus the depreciation, which will give us the new carrying value of 33,600. So this is the new carrying value of our equipment. So if we had to work in the financial year of the 1st of March 2020 to the 28th of Feb 2021, we would use the new carrying value of 33,600 times the 20% to get our depreciation for the year of 6,720. So it's just so that you can see what carrying value has to do and how it affects the financial years. All right. Now, just so that you can see, land and buildings never depreciates. Movements can be classified as any renovations done to buildings or if we purchased a new building during the financial year. Disposals is what we sold the land and building or just a portion of the building during our financial year. All right. As you can see, land and buildings does not have any sort of depreciation. Okay. Vehicles, you can see that it has depreciation, a carrying value, movements, and a carrying value at the end of the year. Same for equipment. All right. Now, they give us this example activity. You look at it, and before you even get to the information, they show you this, and you're like, what the heck? I don't understand what is going on. There's so many question marks in my head and on this paper. How am I going to answer this? So as I showed it to you in the last three, we break them down one by one. We do one asset at a time. Okay, so let's focus on one asset at a time, just like I've done here. All right. So let's take a look at land and buildings first. Okay. So in our information, they tell us that an extension to the storeroom and improvements to the buildings were completed during the financial year. Now they've given us information. They've given us the carrying value at the beginning of the year and the carrying value at the end of the year. All right. Now we know that there's no accumulated depreciation on land and buildings. So in this case, carrying value at the beginning of the year equals cost, okay, which is 425,650. All right. We also see the same for the carrying value on the last day of the current year. So we know that that would also be 6,192,350. Right, now we're not sure how to calculate this extension. What was our movements in this case, okay? And it's actually quite simple to get to the answer because we didn't dispose any buildings, any land buildings either during the financial year. All right. So how do we get it? We say carrying value at the end of the financial year minus the carrying value at the beginning of the year. Okay. So we say 6,192,350 minus the 4,256,350 to give us our movements of 1,936,000, okay, which then is of course equal to our additions at cost. All right, that's land and buildings done. Now we finished with that. Let's move on to vehicles. Okay, keeping in mind these key points because it's very important for especially for the next two assets that we have to do. Right. So here, yet again, they tell us a new vehicle was purchased on the 1st of June 2018, but they don't tell us how much it was, and you're freaking out. You're like, my goodness, how am I going to do this? They tell us that the depreciation policy on vehicles is 15% on cost, but they've given us depreciation. Why? Okay, they're trying to confuse you. So as long as your depreciation is in, you don't need to stress about that depreciation policy. Okay, so just ignore that. You can scrap that one for in this case. Okay, so let's have a look at. We can already start solving some sums here. All right. We know that carrying value at the beginning of the year equals cost plus accumulated depreciation. So now they've given us the carrying value and they've given us accumulated depreciation, so we need to calculate cost. So we say cost equals carrying value at the beginning of the year plus accumulated depreciation. Okay, so cost equals to 535,250 plus the 419,750, which will now give us 955,000. Okay, now if we look again, let's take a look carefully again. They've given us accumulated depreciation and depreciation. So what do we know? Because it's a rule that accumulated depreciation at the end of the year equals to accumulated depreciation at the beginning of the year plus then our depreciation. Okay, so then we say our 419,750 plus our 195,000 gives us an accumulated depreciation at the end of the year of 614,750. Now remember that you need to put it in brackets because accumulated depreciation decreases our carrying value. Okay, or our, yes, it decreases our carrying value. All right, so we need to have a look now again at what we can sort of solve. Okay, so we see here that we have cost and we have accumulated depreciation. So now we can calculate carrying value on the last day. Okay, how do we do that? We say cost minus accumulated depreciation. So we say 1.415 million minus the 614,750, which gives us our 800,250. Now we've already seen to calculate movements, we say carrying value at the end of the year minus carrying value at the beginning of the year. Okay, so we say 800,250 minus our 535,250, which gives us our movements of 265,000. Okay, to calculate our additions at cost, we see that there's no disposals in this case, so it's a zero. We don't need to stress about it, but there is depreciation that we have to take into account. Okay, so how do we calculate additions? We have to say movements equals to carrying movements equals to carrying value at the end of the year. We've done that already. Okay, what we have to do is we have to say movement plus depreciation to give us our additions at cost of 460,000. Okay, sorry. Right, so we have to say 265,000 plus our 195,000, which gives us our 460,000. Okay, so this is how much we purchased our new vehicle for. Right, now we're done with vehicles. Now the last thing we have to move on to is equipment. Okay, so they tell us old equipment was scrapped at a carrying value of 28, at a carrying value on the 28th of Feb 2019. They also tell us that there's a depreciation policy on equipment, which depreciates at 20% on the carrying value. Okay, let's take a look again. They give us cost and accumulated depreciation at the beginning of the year, so we can calculate our carrying value at the beginning of the year. So we say cost minus accumulated depreciation, and that will give us 905,000. Okay, then we can have a look at depreciation. We see that the depreciation policy tells us that equipment depreciates at 20% on carrying value. So we use our carrying value at the beginning of the year times the 20% to give us our depreciation. So we say 905,000 times the 20%, which gives us 181,000. Now remember, it needs to go in brackets because it decreases our assets. Okay, right. Then we can have a look now. Now that we've got our depreciation, they gave us our accumulated depreciation. Now we can calculate our accumulated depreciation at the end of the financial year. Okay, and how do we do that? We say accumulated depreciation at the beginning of the year plus depreciation, which gives us 595,000 plus the 181,000 gives us the 776,000, also in brackets. Please keep that in mind. Okay, as it has a negative effect on our carrying value at the end of the year. Right, now we can calculate our cost at the end of the year. Okay, and how do we do this? We use our carrying value at the end of the year plus accumulated depreciation, which gives us our 1,402,000. Okay, now we can calculate what our movements were, all right, by using carrying value on the last day of the current year minus our carrying value at the beginning of the year. Okay, now keeping in mind that movements can be negative, it can have the answer can be negative because we didn't have any additions at cost. Okay, so we did have disposals in this case, and we did have depreciation, which has a negative impact on our assets because first of all we sold an asset, so we don't have that asset anymore, and depreciation subtracts from our asset value. All right, okay, so how do we calculate disposals now? The old material equipment that we scrapped. Okay, we say disposals equals movement minus depreciation, so the 279,000 minus the 181,000, which gave us the 98,000, and it must be in brackets. All right, then all in all, this is all finished, and we're done solving the note number 3 with the tangible assets, and it's easy as that. If you guys have any issues, please comment and I will get to you, as well as if you want me to focus on any other specific topics to help you, please also comment. I will do videos on whatever you want me to do, and I hope that this video has helped you. Please remember to subscribe, hit the bell so that you can receive notifications for any new videos that I release. Please remember to stay lit, stay real, stay humble, stay safe, and I will check you out in the next video. Peace out, guys.